Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, December the 1st, and wow, I can't believe it's already December, but wanted to just touch briefly on what markets did last week with the S&P 500 finishing the week up 1.53%. Another positive week in equity markets, and the S&P 400 is followed by the mid caps, was up a little bit more, 1.93%, and the S&P 600, the measure of the small cap index, was up 1% even on the week. And so we went into this week after a shortened trading week last week, and I hope everyone had a wonderful and happy Thanksgiving with their families, and you had a positive week in the week for the Dow last week and the S&P and the equity markets as a whole on a shortened trading week. But all eyes this week as we were entering into the week were on a couple of key data points. First and foremost, the Fed Chair Jay Powell was going to speak yesterday and did speak at the Brookings Institute, and they wanted to know what he had to say in his commentary. We'll discuss that in just a moment. Friday, they want to know what the jobs report is, so that's tomorrow with the jobs report. And then today, PCE came out, which is an indication of inflation and an inflationary indicator. And we'll start there with the core PCE. It came in at 0.2 up month over month, less than expectations. The expectations were up 0.3% month over month, so a little less than expectations, which is continuing a downward trend in prices, which may be telling us that inflation may have actually peaked and that we are seeing some price stability and things come down. Fed Chair Jay Powell got up and spoke yesterday and talked about how in December that it may be appropriate for less severe rate hikes, not as aggressive on the rate hikes, not saying that they aren't going to hike, but that they don't have to be as large of a rate increase. They could see some decrease, and he spent a lot of time talking about how they do not want to overdo it on raising rates and they want to be sensitive. And that was a really big market rally yesterday, seeing the NASDAQ finish the day on Wednesday up over 4% on the day. The S&P 500 finished the day up over 3% off of Fed Chair Powell's comments. What that means is that inflation may be peaking. They aren't going to maybe go 75 in December. Maybe they go 50 in December, 25, and 5 is as high as they get to their rate, their terminal rate. So that caused a lot of market rally yesterday. And so today we've seen a very tepid market on Thursday ahead of Friday's jobs numbers. And what the Fed wants to see is a slowdown in those numbers, and that hiring is in fact slowing down. And so one of the questions that I posed in my introduction here is it time to get bearish or bullish? Is it time to remain bearish, or is it time to get bullish? And the question that I would pose to you is, with the S&P 500 being down around 25% this year at its lows, and the NASDAQ down over 30%, close to 35% at its lows, is all the bad news priced in, or what else is there to come? And what other news could really take us down? Or is it time to really look at a very positive spin on the equity markets? Because I'll give you some data points here in a moment that point to the contrary. So it's not saying that we can't go down from here, but what catalyst is going to bring us down to new lows that doesn't exist in the marketplace currently that we have out there? So 1 year out of a recession, the average return in the S&P 500 is 21%. 3 years out of a recession, you have a return of 50% on average in the S&P 500, and at year 5, you have a 100% return 5 years out of a recession. So the question is, if you're sitting on the sidelines, what's keeping you from getting in? Because we could argue that a lot of this negativity has already been priced into the equity markets this year, moving into 2023. So if you have questions about how to position your portfolio, or if we are on the cusp of maybe on a breakout to the upside, give me a call, give us a call. We're easy to talk to. We would love to talk to you about your portfolio and how to position yourself moving into the new year. Give us a call. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your day. Thank you so much.